Are you curious about the difference between a bank and an e-money institution? Or maybe you've heard of Tide and are wondering what exactly it is. Well, you've come to the right place. In this video, we're going to dive into the world of fintech and explore the key distinction between these two financial entities, using Tide as our prime example. So, let's get straight to it. Is Tide a bank or an e-money institution? The short answer is, Tide is an e-money institution. Now, you might be thinking, what's the difference? They both offer business accounts, payment cards, and ways to manage money. And that's a fair question because, on the surface, they can look pretty similar. However, there are some fundamental differences, especially when it comes to regulation and how your money is protected. A traditional bank holds a full banking license. This allows them to offer a wide range of services, including loans, mortgages, and most importantly, they can hold your money in deposits. These deposits are typically protected by a government-backed scheme, like the Financial Services Compensation Scheme, FSCS, in the UK, which covers up to £85,000 per person, per institution. An e-money institution, like Tide, operates differently. They hold an e-money license, which allows them to issue electronic money. When you put money into your Tide account, it's not held as a deposit. Instead, it's held in a separate, safeguarded account, usually with a major bank. This means that even if Tide were to go out of business, your funds are protected because they are kept separate from Tide's own operational funds. This process is known as safeguarding. So, while Tide provides many services you'd expect from a business bank account, like sending and receiving payments, and managing your finances, it's not a bank and doesn't offer things like overdrafts, loans, or interest-earning savings accounts. Instead, it focuses on providing a user-friendly, feature-rich platform for small businesses and freelancers. In summary, the key difference lies in the license and how your money is protected. A bank has a full banking license and your money is a deposit protected by the FSCS, whereas an e-money institution has an e-money license and your money is safeguarded in a separate account. Understanding this distinction is crucial for making informed decisions about where you manage your business's finances. Both types of institutions have their pros and cons, and the best choice depends on your specific needs. With that said, thanks for watching and until next time.